Good morning, traders. Today is Wednesday, November 2nd. My name is Charles, and this is the Pirate Traders live stream, where we talk about the ES and the NQ and the two-way auction process. All right, well, let's dive right in. First and foremost, what are we expecting when the market opens in about 2 minutes here? You guessed it, chop zone. All right, so obviously yesterday we had a B-shaped profile. A B-shaped profile is a form of balance. It is a sign that the market has more long liquidation and less new money selling. The overnight then continued that B shape, giving us an even bigger B, continuing that balance right inside that tight range that we got stuck in during the second half of yesterday. So the highest probability right out the gate this morning is more chop, right? More balance inside this range. And so we can very simplistically just watch the overnight high and the overnight low and look for continuation at one of those levels and expect chop in between. Okay. So if they push below the overnight low, come back up, find some resistance, we can look for continuation lower. Or if they push above the overnight high, come back down, find some support, we can look for continuation to the upside. But as long as we're in the middle, just expect chop and grind. It also wouldn't be unreasonable to have a relatively slow morning, as the notes from the FOMC meeting come out at 2 p.m. today. And likely most of the larger participants are waiting for that to come out before they, enter a position today. So the odds of us having a very boring day until 2 p.m. are somewhat higher today. That doesn't mean it's impossible. I have said that before on FOMC days, like, oh, it'll probably be really boring till 2 p.m. and then we have a crazy trend. So it's not impossible that we could get above the overnight high or below the overnight low and then get some continuation. But the highest probability in my mind is just chop and rotation. Let's take just a second to step back and take a look at the daily. Chilling with Dylan brought this up yesterday. We've got some beautiful confluence happening here. We've got an uptrend from the lows and the 50 simple moving average on the daily. The 50 simple moving average was acting as resistance. Okay. It was holding the market down a few days ago. So the question is, can it now become support? If the market comes down here to about, let's call it 38.25, can it turn that area into support? It's got two reasons to, both of which are levels that swing traders would be watching. They would be watching the daily moving average and they would be watching that uptrend. So if we do start to push the market lower, I will be interested to see how the market reacts to that level down there. And look at that. We're below the overnight low. So now the question becomes, do we get new sellers here? Resistance and continuation lower. We'll be looking for the market to stay below the halfback here if they are going to break lower. So stay below 38.56. Only 37 likes this morning. What's up, guys? Let's smash that like. All right, so pushing below yesterday's low, once again bearish. Looking to stay below 38.55 for continuation. I hate to say it, guys. It's going to be tough to get to 100 now. Only 30 people pushed it when they first got here, so now there's only 100 people here in total. And with only 100 people here in total, it's going to be tough to break 100 likes. Gotta smash that like button right when you get here in the morning. All right, resistance at yesterday's low is bearish. Doing your part, Mr. E. Appreciate you. All right, this is bearish. Breaking below yesterday's low. Getting new selling below the low. So the next major support is around 38.35. Corbin, yeah, we got to bring in those strong hand likes. Got to squeeze out the weak hand likes and bring in the strong hands. We need likes we can count on with follow through. There's so many different resistance levels here. Just note the resistance is this general area. You got the halfback, you got the overnight low, and yesterday's low. So this is what we want to hold for continuation lower. All right, resistance is holding. That's bearish to see. All right, now the market got its way back to the zero line. We're still stuck on this resistance. So do the sellers come in and smack the market back down, or are the buyers able to break back through? Can they get back up above the halfback and get the ticks above the zero line? If not, the market remains bearish. Xavier, yeah, feeling bearish as long as we remain below 54. Ad Joshua says new chop zone area. No, it's much more important than that. It's a potential breakout of a chop zone area. So this is the buyers trying to stop the market from moving lower and try to keep us in that chop zone. If they fail, it means we do not have the buyers up here. And if we don't have the buyers at this price, we often have to pull down to lower prices, looking for buyers there. Does not look like we have buyers. Three more likes. Can I get two more likes? Two likes from anyone in the chat. Can I get 2 likes? There it is. All right. I'm bearish. Not massively so. Like I said, let's see what happens at 36. The market doesn't necessarily have far to go, but the momentum is down. Just now noticing we left 100 contracts here at 38.57. I will actually remain bearish below the opening price, just in case they want to come back, fill that a little bit. So I'm bearish below the opening. Looking for chop if we pass back through that opening price. Well, thank you, Ryan. Appreciate you. Jill Madone says, we're out of yesterday's value. Totes bearish. That is true. Value is now overlapping to lower. which is bearish. Neutral to bearish. All right, only 11 contracts at the low, and they're all buyers. So the low is weak. It's Talvera. Thank you for the sub. Welcome. Also, while we got some people hanging out, it's worth taking a second to mention we will be back right here on the public stream today at 2 p.m. So if you guys want to hang out later on in the afternoon, definitely come back. We're going to watch those FOMC notes come out together. For what it's worth, these bracketing bots that are just holding the market stuck in this one spot like this makes me fear we're going to have a tight rotational day here. Up until 2 p.m. anyway, obviously. then anything can happen. But man, they've just got these bots literally forcing the market to stay completely stuck in one spot. So they're clearly trying to get one side of the market on the wrong side, right? They're either building up sellers so they can pull the market back up into yesterday's range and squeeze them, or they're trying to get buyers to accumulate in here so they can dump it lower. But yeah, they're keeping it just stuck in that tight range for the moment. Thanks, Pappy. John Q, NQ feels like it's not as bearish. Yeah, I could agree with that. It's still bearish, no doubt about it. Especially with the overnight testing lower than the regular trading hours. That's bearish. But it seems a little less bearish just because we're still inside the overnight range. But I would say it's equal. Essentially, the overnight just got a little bit ahead of the regular trading hours. And Joshua. Because it's a little tiny baby chop zone. Cute little baby chop zone. Cute. Chilling with Dylan says structurally this looks really poop. It does. I don't hate it. Of course, I don't know what you're referring to, but if you're talking about on the daily, it's not too bad. I mean, it's kind of what you would expect. A huge move to the upside that is balancing off with price, not time. Looking for support. Unless you're talking about the intraday profile right here. Yeah, this is weird. Oh, chilling with Dylan said pop. Okay, well, Freudian slip. You guys know what I'm really thinking about over here. All right, so B period created a poor low. That increases the odds that it's going to come back and repair that poor low, which would get the initial balance going to the downside, which would be bearish. We also just pulled the value area completely below yesterday's value. That is also bearish. So now we are looking for resistance once again at yesterday's low and the half back, 38.51. If that resistance fails to hold this time, I'll just go back to a neutral stance and expect more chop. They clearly have a bot, one of those bracketing bots in play here. So we may be looking at just bouncing around in a tight range. But if the sellers can keep us, can hold that resistance at the halfback, then they're still in charge. And they got a poor low in need of repair. Michael, bearish but seemingly stuck. Yes, that's how I would describe it. It's bearish, but man, it's having a hard time going anywhere. They're starting to bring in some volume lower, though. If you zoom way out on the book map here, you can see they've been keeping the volume super tight and just right around the market on both sides. So to kind of keep it bracketed, but they're just now starting to bring in some volume lower. So they're giving the market a target to start to try to work towards to the downside. But a lot of support they got to get through to get there. Christian, what time frame do you have on the book map? Book map isn't really a time frame thing. It's just a matter of how zoomed in you are at any particular moment. You can zoom all the way in and look at it within fractions of a second if you want, or you can zoom out and you can look at it over the last 2 days. You just kind of zoom in. It does the time basis isn't the same as candlesticks. The cool part of that is, if you trade, if you're like a scalper, you can see what's happening within a 1 minute candle because you can zoom right in. Chilling with Dilling. Interesting to see if the Fed is dovish with all the POTUS and banks, etc., requesting a lesser hike. I doubt it. Papa Pal has said what he's going to do. He's going to keep his foot on the brakes until he actually slows the economy. So I think we're getting 3 basis points as expected. The Shah should have dressed as Pappy instead of Ninja Turtle for Halloween. No one would have got it. But now that you mention it, Ninja Turtle, it would be fun to try to come up with an outfit where you become Ninja Trader, and you become like the software. What are you, bro? Like you'd be like a ninja that's wearing a suit. I don't know. Think about it for next year. It's just an idea. Ninja Trader. Or you could be in a ninja outfit, but you could be running around with little slips of paper. Like you'd be an old-fashioned floor trader. Anyway, think about it for next year. Michael says slows the economy until it crashes like a DC-10. Yeah, dude, he does not have an easy job. He has an incredibly hard job. I certainly know I wouldn't want the responsibility. Javier, so every time I see a B-shaped profile, I should be looking bearish. Actually, no, quite the opposite. The B shape means don't be as bearish, right? So if yesterday's range was really bearish, if it was as bearish as it could be, it would have been a trend day. So we would have started breaking lower, built up some volume, pushed lower, built up some volume, and we would have just kept doing that all day long. If we did that, then you would have thought when we opened up today, like, oh boy, there's momentum. You know, there's new sellers that continue to pile on the lower and lower it goes. So if it goes lower again today, man, there's probably going to be more sellers piling on, right? But if it's a B shape, it saves you from that fear, right? It lets you be much more calm at the open because you say to yourself, oh, this wasn't really new money selling. It was really just short covering. I'm sorry, long liquidation with a little bit of new selling, but not really a ton of new selling. So it's neither bullish nor bearish. It's just kind of a note to not be super bearish, to assume it could go lower. Yeah, absolutely. But it could also go sideways or higher. That's the point of differentiating the B. And today would actually be, thus far anyway, a great example of that playing out, right? That we even did everything we should to cause the market to go way lower. We opened, we went straight down. We pushed below yesterday's low. We've brought in volume. We've spent time. We've pulled the value area. Like every single signal we have says this market should be crashing and burning lower, but yet it's going nowhere. Why? Because there really isn't new sellers piling on. And quite frankly, there's no new anybody doing anything today. It's just bots trading back and forth, forcing the market to stay in a tight range. And we know why. Because it's going to be a beautiful day to get short-term traders stuck on the wrong side of the market once that FOMC happens. They've got 4 hours to squeeze us as much as they can, up and down, up and down, up and down. I'll take some of your money. I'll take some of your money. I'll take some of your money. And then by the time 2 p.m. comes, you've got no money left to trade. And they can take your profits and push the market around however they want. Chris Charles as a guest, who could it be? It's always one of two things. It's either Amazon or a hooker. Those are the options. Uh, Xavier, do you think that will remain in the initial balance until the Fed? No, I don't think so. Um, I just think we're not going to get the big, massive downside move we should be getting based on this momentum, because I just think those bots are going to keep the market bracketed. So they could slowly grind lower. But yeah, I mean, it's just too hard to guess. Often FOMC days are a nightmare up until 2 p.m. And then at 2 p.m., things get real interesting real quick. PW, Charles, have you ever made a video showing how you execute trades on the TPO? When I try a new trading strategy, I find it very useful seeing how an expert with the strategy executes trades. All right, I'm going to say something right now, and it's going to sound like I'm picking on you. I'm not. I'm just going to use you as an example because you're the person that asked the question. But the way you're talking about whenever I'm learning a new, trading system, I like to see the expert trade it. That's why you keep having to learn new systems. Right? If you learned a system the right way, you would only ever need one system. You would find a way to be profitable in the market and you would just do it every day and make money. If you're jumping from system to system to system, it means you're not able to be profitable in any of those systems. What I would argue The reason you have not been able to be profitable in those other systems is because you've just been copying other people's style and the way they trade. If you're just copying other people's style, you probably won't be anywhere near as successful as them, because their style will have been custom engineered for them, right? So this is one of those things. It's like when I talk about the way I approach trading, right? My style of trading, which is like, I'm looking for longer term, I'm looking to sit in trades for a half an hour to a couple of hours at a time, right? If the market's going to make, 100-point move in a day, I want to catch like 50 of that. I want to catch the meat of the move. That's sort of the way I trade. I don't like scalping. I don't like looking for quick little get me in, get me out, make a buck type of trades. I just have my way of trading, right? That's right for me. And the thing is, my way of trading won't be right for most of you. Most of you, your psychology is not the same as mine. Your account size is not the same as mine. Your experience level is not the same as mine. Your emotional control, all of these things, very, very different than me. So you don't want to copy me. You do not want to trade the way I trade. You won't make money like I do. If you want to make money like I do, you have to find a system that's right for you the way my system is right for me. Does that make sense? So as far as entering trades, earlier this morning, I had an arrow pointing to resistance. I had a line showing where I would, be bearish below, and I had a target for where I was looking for support. In those cases, I put a limit sell order at the resistance. I put a stop above the level where I'm wrong, and I put my take profit at the level where I see support. That's it. That's how I trade all day, every day. It's just, am I getting resistance? Great. Let me get short. Where do I put my stop? Where's the trade idea wrong? Okay. Where do I take profits? The area where I think it's the most strategic location to take profits. Like, that's it. I just do that all day, every day. But if I were to sit here and try to explain it to you all day, every day, it would drive you absolutely mad. Okay. So the better way to do it is learn to read the market. Don't worry about trades. If you're still building a trading system, if you're not profitable right now, stop worrying about trading and just focus on learning to read the market, learning to understand where is the market going to have resistance. Where is a level where my trade idea will change and I will no longer be correct? Where is a good level to look to take profits? Just learn to think like that. What is the market doing? If it pushes below yesterday's range and it builds up resistance, it's likely going lower. Okay, if that's the case, where's the best place to sell for resistance? Where's the best place for the stop? Where's the best place for the take profit? And then you try it out. So today you try entering it. And then maybe today what happens is the market is doing what it's doing right now. It's slowly grinding lower. And then you go, ugh, I can't take it. I'm so frustrated. I think it's coming down to test support, but I just can't wait for it. And so you get out early. Well, then you'll learn a lesson from that. So then the next day you can say to yourself, okay, I don't want to enter trades like this when the market is grinding. I'll get in this trade if the market immediately pushes below yesterday's low, comes up and finds resistance instantly, and then it's looking to go lower, then I'll jump in. But if it's this slow, grindy market, it will frustrate me. I will become upset. I will become emotionally affected by the fact that I'm in a trade and it's going the way I want it to go, but it's not moving, right? If that causes you emotional distress, there's a lesson for you. There's the information. Okay, I need to change my trading strategy to fit my emotions. This type of market doesn't bother me at all. I can sit here and wait and wait and wait and wait and wait for it to get where I think it's going because I know where I'll be wrong. And as long as I don't see that, I can just stay in a trade. But you guys might be frustrated by that. And so by getting all angry and frustrated and all morning saying to yourself, what is it doing? Is it going to go lower? Hurry up, da-da-da. Running this debate in your mind is exhausting your brain. And so later on in the day, when the FOMC happens and there's opportunities to make tons of money, right? When the market's moving very, very fast, which your brain likes, you'll be too tired. You'll be worn out from this morning. Your account will be in the red. You won't feel like trading, and you will miss the real opportunity to make money this afternoon because you didn't know what kind of trader you are. You didn't know your own personal psychology. And with your personal psychology, if you're better off trading a faster moving market, this morning you shouldn't be trading. You should be waiting for the market to pick up later in the day. So I'm sorry to go on a whole tangent and a whole, rant about it, but it's something that I really feel passionately about. If there's anything I can be certain of in this industry, without a doubt, the only way to consistently make profits for years and years and years is to invent your own system from scratch. That's it. I've never met another trader on earth who makes a living for years and years and years just copying somebody else's system. Every single person had to develop their own way that is custom engineered for their psychology. And if you're busy copying somebody else, you are not doing it for yourself. You are not thinking for yourself. Peter says, although I agree that something is required in order to profit in the markets, any system will not give you money. You need to get in the zone and surf the waves. Well, Peter, it sounds like your system requires you to get in the zone and surf the waves. There's people who trade purely with algorithms. They're not even watching the computer during the day. Talk about getting in the zone and going with the waves. They're not paying attention at all. There's some people whose systems are built purely on statistical probabilities. Your type of trading is like mine, where you just want to get in the flow of the market and move with the market and understand that some days you'll be wrong and some days you'll be right. And that system is right for you. But that doesn't mean it's right for everyone. Everyone is different. All right, so here's the ultimate question for today as we print the C period here. Can we break the initial balance low, or are we doomed to rotate around inside this tight range the rest of the day? Waiting for 2 p.m. If we do break the initial balance low, if the C period low is able to push below the B period low, that would be the beginning of one time framing lower, which is bearish, as it is a sign of a potential trend to the downside. Again, the support is just below us, somewhere between, say, 36 and 34. So I don't know how far they're going to be able to push it, but if that C period breaks that B period low, that is what they're trying to do. Push it down into that stronger support. If they're able to hold the low here and head back up and get through the halfback at 38.50, you're likely just looking at a sideways grindy market for the next few hours. So we'll see what they've got. I wish you all the best of luck. I will be back here at 2 p.m. today to watch those FOMC notes come out, and I hope you're all here to join me. Members of the brigade, let's sail. Oop, there's a poor low, increasing the odds. They're going to start trending lower.